What is happening, everybody? Happy Leap Day. I only get to say that once every 4 years. Today is Thursday, February 29, 2024. Hope you're doing well. Boy, we had a little shakeout in the market here right before we went live, and then we retraced the whole thing. Apple traded below 180. The whole world is watching that, and I wouldn't be surprised if the market has another little Lucy move. Where the Lucy holds the football and Charlie Brown tries to kick it and she always pulls it away. Wouldn't be surprised if we're setting up for one of those moves right here. But hey, let's get into it. This is the options jam session. What we do here is we review any action in any of the open trades that we have in the All-Star Options service, any exits that we may have taken, whether for a profit or for a loss, any adjustments we're making on any open positions. We also go through a rundown of updating stops. We like to trail some stops in open positions to lock in profits or reduce potential losses if we can. And then we'll do a quick little rundown of new trades since we last spoke. But before we get into all that, of course, I have to drop my old disclaimer that everything we discuss here is for educational purposes only. I'm showing you what I'm doing with my money, and I hope that you learned something from watching me go through my process. Okay, so let's start at the top like we always do with a high-level look at the broader markets. The S&P 500 is the index I track most closely for that measure. And as you can see, once we broke that resistance, when was that? Early this year, it's been nothing but, I shouldn't say nothing but straight up. We've had a couple hiccups, a couple small, short-lived hiccups along the way, but stocks continue to show resilience, continue to go higher. If you're fighting that trend, well, good luck. It's not always not always fun being on the wrong side of trends. Next up is the next up chart here is the VIX, VIX. We like to show what's going on here with the volatility. Not really getting too many signals here with volatility, but VIX got up above 15 briefly, but no real headwinds here. Nothing really alarming. So, hey, I wish I had more to tell you with the VIX, but it's just not telling us a whole lot. All right, so let's get into, I believe it's 3 trades that we exited this week. None of them really worked. That's okay. The irony is we had a short position that's ripping higher, and we had a long position that's ripping lower. Sometimes that's the way it works. Hormel Foods is one of those trades that we put on as a portfolio hedge. If you've been paying attention over the last few weeks that we've been doing these episodes that I've been talking about, we have a lot of long positions that we have comfortable gains in right now, but the market was showing signs of maybe getting a little toppy, or at least maybe due for a pullback. And so we wanted to put on some short positions to hopefully balance out anything we would suffer with our open long positions. And Hormel is one of those trades. We got in on February 14th, and really when we got into this trade, there was a catalyst that we were leaning against to be the thing that moved the position in our favor, and that was earnings, which was yesterday, or maybe it was this morning. Hormel Food, it was this morning. Hormel Foods announced earnings this morning. We thought that the earnings would surprise us in the direction of the underlying trend. Well, the market has its own sense of humor, and Hormel instead, as you can see in this candle here, has ripped higher today. When we put the trade on, we knew it right away. We knew it going in that it was a all or nothing trade. This is a trade that it's either going to be a zero or we were going to be heroes. And in this case, it's a zero. We paid 15 cents for the March 25 puts. Well, we're not going to be able to sell them for anything now. They're basically zeros. They'll just stay on for lottery tickets now. There's nothing really we can do. We can't sell at zero. There's zero bid in these puts right now, last I checked. We'll just hold them for lotto tickets. If something happens, we still have until March. If this Hormel gives up this gap, it comes all the way back down. I don't think it's going to, but hey, you never know. It's not costing me any extra to keep these puts on. But basically, this one's a zero. Write it off. Moving on to the next trade. The next trade is, I wish I had better news, but I guess it's slightly better news. This is Snowflake. We're in a bull call spread. We bought the May 210 calls and shorted the May 240 calls. We paid 10.75 for it back on January 24th, and it was looking really, really good. Unfortunately, Snowflake had earnings last night. It's been discussed in the media quite a bit. Had a big gap down. The good news, if there is any good news to relate here, is that as we stand right now, we're still in the position, by the way. As we stand right now, our spread is trading, last I checked, right around $5. We paid 10.75 for it. So at $5, it's not a total loss. It's kind of a loss that we're happy to take, considering what has happened here. But we'll probably most likely be exiting this trade tomorrow at tomorrow's open. But we want to just keep it on just to see if there's a little retracement here. We've seen some big gap downs have some monster retracements over the last over this earnings season. So let's see. We got a few hours left to see if it can at least claw back and minimize our losses a little bit. But it most likely we'll be exiting this trade in Snowflake. Our stop loss level in Snowflake, by the way, was where was it? It was 205. So in the off chance that it rallies back and gets at least back above 205, it would still be down big on the day. But if it gets back above 205, hey, we may continue holding this trade. Who knows? But right now, not looking so great. Last up is Pinnacle West. Boy, maybe we got the old rope-a-dope on this one. This is a bear put spread, another one of those positions that we put on as a portfolio hedge. Got in on February 9. It looks like we basically got in at the low and covered at the high of the reaction. That's never fun, getting whipsawed like that. It happens. It's part of the game. We paid $2.15 for the bear put spread, which is we were long the July 65 puts and short the July 55 puts. We paid $2.15 to get into that spread. We got out for about $1 and change on the 22nd. So not a total loss. We'll take it. But boy, you hate to see a chart like this where it really looks like you sold the low and bought the top. But that will happen, and it does happen, and it'll happen again, I promise. All right. But let's talk about the good news, right? We have a bunch of positions that are still really working well on the long side in particular. Uber is leading the league here for us for as far as gains go, our biggest winner in quite some time, I think. We got into this on November 8th. It was a hard trade. I said it was a hard trade when we got in. I said to everybody, look, this is a hard trade. It's very likely to lose, but if we win, we're going to win big. And hey, looks like we're winning big. It's nice when that happens, right? One for the good guys. We're along the March 60 calls. Now I'm bringing this up for a couple of reasons. Number one, well, the reason is March 1st is tomorrow. And so now we'll be in the expiration month for these calls. And my best practice when I'm holding long calls that are in the expiration month as we're approaching expiration is I start to get really aggressive with my trailing stop. I don't leave a resting order in the market. It's more of a mental stop, but I set alerts on my platform, and when price levels get broken, that's when I take action. And in the case of Uber, we are now using 76 as our level. So going forward from today until March, is it 15th is the expiration day? From now until March expiration, I'm going to be looking for opportunities to raise my stop to keep following along Uber. I hope Uber breaks higher. I really do. But I'm not going to give it much rope from here. So basically what I'll be doing, and I'll be using a little discretion, but I'll be looking at the previous day's low, the previous 3 to 5 day low as my stop loss level. So as Uber hopefully continues trending higher, that would be great. Our trailing stop will be just below it, at the 3 to 5 day low to lock in those gains. We don't want to give too much back here. We've got a great win, all right, but we'd hate to give a whole lot back in the last week before expiration. So 76 is our level. If we close below 76, we're out. Hopefully it doesn't get hit. Hopefully this thing goes and closes on highs on expiration day. It doesn't happen very often, but when it does, it's very nice. Congrats to any of you who got into that Uber trade with us. All right, next up, Cloudflare. This is a long calls position that we got into back on November 29th. We actually sold a portion of our position on February 9th into this. This was an earnings reaction here. So we already have locked in profits on Cloudflare, which is great. We can't lose in this position no matter what. Cloudflare could go to zero tomorrow, and we still walk away with profits because of the portion that we sold on the 9th. But that said, we are raising our stop for the remaining position up to 90. We don't want to see Cloudflare break below 90. Break below 90 is our signal that the trend is over, at least in the short term. And we only have until June on these calls. So any close below 90 gets us out. And whatever we sell those calls for on that break, that just adds to the profit we already have built into the trade. So we'll take it. Next up, Ecolab. Boy, we had a really great gap go in our favor, and it is following through, which I love to see. We got into long calls on December 22nd during this area here. It kind of went consolidated sideways a little bit longer than I hoped it would, but we finally got the break we needed. It was earnings that did it. We gapped higher. We retraced a little bit, consolidated, but now we are breaking out again, making new highs in ECL. And we are now raising our stop to the 215 level, which basically corresponds with the low close during this consolidation. So we don't want to see Ecolab get back into this gap. That would be pretty bearish for our prospects. So 215, that's where that's where our stop is now for Ecolab. All right, TJX companies. We got into this trade for a $100 roll. The $100 roll has happened. TJX did, in fact, break above 100 this week. We are still holding out for 106. 106 is the price where we'll take some profit off the table in TJX. But in the meantime, we'll worry about profits when we get there. We are raising our stop to 96. That's for whatever portion of the position we have on, whether we have the whole position or a smaller portion of the position, whatever's left. 96 is our new stop loss. And it doesn't show up on these charts here, but I often will use 50-day moving averages as a guideline for setting stops. It's not something I follow religiously for stops, but if we have a moving average that's moving higher, and I don't really have a very clear stop loss level on the chart to use, then the 50-day moving average comes into play. And in this case, I believe TJX, the 50-day moving average is currently right around 96. That's a comfortable level for me to place a stop. So that's where it is now in TJX. Next up is Taiwan Semi. We're getting real close to our profit target. This is a bull call spread. We're long the May 115 calls and short the May 135 calls. The plan going forward is if this gets up to 140, we're going to take the spread off and take the profit. We got close, but we're not quite there yet. But meanwhile, we're raising our stop to 122. If Taiwan Semi cannot hold on to 122, we will exit the spread and get out. It may potentially be a profit depending on what happens at that level when that happens. But we paid $6 for this spread at 122. The intrinsic value of the spread is about $7. So it'll be close. We might be able to eke out for a small profit if 122 gets broken. Either way, it'll be a close call. But hopefully, actually, I believe it's 135 where we're taking profits. I should know this, but I don't have it. I'm 90% sure it's 135, which is our short strike level. That's where we're looking to take profits on this trade. Wells Fargo is the next one we're raising stops on this trade. We had a couple false starts in this. Steve Straz and I traded it a couple times. It got stopped out. But this time it is stuck. At least it appears to be sticking. We're long the January 2025. So that's 8 months until expiration. We're long the 60 strike calls we paid $1.75 for back on January 29th. We got really close to being stopped out again down here, but we never closed below our original risk management level. We are now raising our risk management level to 50. I believe that also corresponds with a 50-period moving average. So below 50, we want out of Wells Fargo. If it stays above 50, we're going to keep riding this thing. We got a lot of time. We got 10 months still for Wells Fargo to play out. I like our chances the way this chart's looking right now. All right. That's all we have for updated stops. For those of you who are in those trades, hey, just be mindful of them, especially if you're sitting on some big profits. I know that it's counterintuitive, but sometimes when you're sitting in a big winner, those trades are the hardest to handle because every bone in your body wants to take those profits. But trust me, be patient, stick to the plan. Doesn't always work out the way we want it to, but if we stick to the plan, we put ourselves in position to win and to win big, which is what we need long term, right? We have to have the big wins to make all the other small wins and small losses that wash out. Got to have those big wins to make it all worth it. All right. Lastly, we're just going to talk about 3 trades that we've put on since we last spoke. I won't get into the details. If you want details on these trades, head to allstarcharts.com, head to the members section, head to the options section. You will find detailed trading plans for all of these trades. We get into what we like about the setup, why we're putting a trade on, what strategy we're using, where we manage risk, where we may or may not take profits. All those details are laid out in the blog post that you can find at allstarcharts.com. If you don't have access to that, please hit us up and we will gladly get you involved. But quickly, I'll go through these. ACLS Technologies, ACLS, we put a short trade on this one. We're shorting weakness. One of those portfolio hedge type trades. If the market does roll over, we feel like ACLS Technologies will be one of those names that does in fact lead us down. So that will help us. And so far, it's shown signs that it wants to keep going. So we'll see. We also put a bullish trade on in Amphenol, ticker APH. This one is one of those trends that you don't want to fight, right? I mean, look at this relative strength. It's leading the league in upside, as some might say. When you have a breakout in relative strength, that means it's outperforming its peers, the broader market. So those are the types of stocks you want to be in. Is this a rotation play? Perhaps. But boy, we love this base. And we think that this stock has some significant upside to go. And lastly, the last new trade we put on is a trade in FXI, which is the China large cap ETF. This trade we put on we're kind of legging into it. It's something we don't do a whole lot here, but we're trying to be patient. We think that this could be a meaningful bottom that is setting in China. A lot of the stars are aligning for that to happen. We could be totally wrong, and we have a plan if we are wrong. But we like this setup for a long trade here. Again, you can find all the details at allstarcharts.com. All right, guys, if you have any questions at all, please send me an email, info@allstarcharts.com. Or if you want to get involved and have access to the detailed trade plans and all-star options, shoot us an email. We'll hook you up. And as always, you can reach me on Twitter. I'm OptionsSean on Twitter. Happy to engage with you there. All right, everybody. I hope you're enjoying your leap day. It's like a bonus day, or maybe it's all a simulation and we're not even really here. We're all imagining it. Who knows? I don't know. Either way, happy leap day to you. Enjoy your upcoming weekend. I'll see you on the morning show next week on Stock Market TV. Until then, take care. Be well.